afternoon, everyone, and welcome to TBR's quarterly Telecom Infrastructure Services Benchmark Review. My name is Allison Crawford, and I will be your host for today's session. Tues is to provide business research to accelerate our customers' success, and the information we'll be covering today comes directly from our 2Q12 TBR benchmark report. This report includes information on vendor strategies, geographic growth, segments, and more. The information our networking mobility team delivers is valuable to any firm with plans to expand footprint or compete more effectively in the global TIS market. I'm excited to present some of our findings to you and get your feedback on our information. Before I go over to Chris, there are a few items I'd like to cover with you. First, we will be recording today's session and posting it to our TBR YouTube channel. I encourage you to visit our channel to watch this presentation or any of the others we've recorded again. We'd like to hear your opinions and thoughts on the materials we're presenting. Please see questions or comments to the Q&A function or the chat function. Chris will address them at the end of the presentation. Third, send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. Now, let me introduce Chris Antlitz, analyst on the Networking Mobility team here at TBR. Chris, covering the telecom infrastructure services market for the past 5 years, guides the research on our TIS benchmark. Insight into operators and their competitive strategies helps our clients improve their strategic go-to-market plans and improve performance. And with that, let me hand this over to Chris.
Thanks, Allison. Welcome, everyone. So in 2012, the TIS market grew more than 3%, and much of the driver was from LTE rollouts in North America, Japan, and South Korea. There was also a lot of managed services activity taking place in EMEA and CALA, particularly Europe. Actually, Europe had a pretty decent quarter if you look at from a services perspective. We'll get into that a little bit later in the presentation, but outsourcing remains a very key growth area preventing that continent. Key themes from 2Q12. First, managed services in the market. That was the fastest growing service of the four we track. We track deployment, maintenance, professional, and managed services. Second, North America, key region with LTE deployments, which are accelerating. We have all of the Tier 1 operators now in both the U.S. and Canada going on LTE, accelerating roadmap schedules. That's bringing a lot of money to the vendors. And third, we'll touch upon Alcatel-Lucent, Nokia Siemens, their restructuring programs. And those are going to unlock some opportunities for rivals to take market share. We'll talk about how that's going to shape some of the market going forward. So those things, just a little overview about what the telecom infrastructure services research we do is. TIS is it's a quarterly benchmark report. It's a study model, also has market share, and there's some margin analysis involved as well. So I'll cover the top 38 TIS suppliers globally across 4 service types: deployment, maintenance, professional, managed services. And we model out by the 4 major regions, so North America, Latin America, EMEA, and APAC. This research we identify leaders across the different geos and service types, identify best practices, strategies, growth opportunities in the market, etc. The 38 vendors we track, got the usual suspects, the Tier 1 NEPs, Ericsson, Alcatel-Lucent, Nokia Siemens. Why? Then you have some of the IT providers like IBM, HP, and also niche players like a Convergys, NEC, communications construction companies like that who have a little more narrow focus on the market. Jumping in, so market leaders. This is the top 10 largest TIS suppliers in the quarter. Ericsson had a very good quarter. Even if you exclude the addition of Telcordia, Ericsson still grew at a double-digit rate year-to-year. Ericsson is, they're really getting very good traction in TIS. There's still drivers for that. The first thing is network modernizations in Europe, as well as services in Europe. Also, the LTE deployment in the United States and Japan. And they're also getting a lot of traction in OSS BSS and systems integration around integrated software and as part of those network modernization contracts. Also had a very good quarter. They are really getting some good traction in managed services. They have won a few new contracts in Europe, and we'll get a little later the details on those. They remain strategic to Huawei. They are still a little behind in some areas. They're throwing money at developing capabilities in areas like the consulting end. Some of higher value services, they still remain relatively weak there, but they are investing heavily to try and recruit some more entrenched providers of those services. Look at the two suppliers. Jabil has a nice spike there. Jabil bought Telmar, a very heavy presence in North America. They primarily do spare parts management, aftermarket parts for operators' networks, infrastructure end. A nice boost in the market services business. I expect that a key beneficiary of some of the networks that are being deployed, they'll be backstopping the maintenance of some of those networks. So Fujitsu, we are two suppliers. House quarter, some of their Japan business is starting to wind down. They need traction in the space. They're still heavily dependent on the network equipment services, so product attached services. They're focused on some of the faster growth rate areas like the services around software. They have the capabilities that some of the other providers do, and they're not benefiting from that. Quick margin leaders. Notice in general, software suppliers and also the tower, some of the niche players in the market, so the tower guys, American Tower, Crown Castle, they routinely feature prominently on this list. They tend to get the highest margins in this industry. The software players, they benefit from the software maintenance, so maintenance support. Their businesses are heavily skewed towards that, particularly around supporting the OSS BSS systems of the operators. And on the other end of the spectrum, you have the tower guys. They get margins. They have very small TIS businesses, but they for project oversight for tower deployment, but they do the tower deployment. They are overseeing the contractors that are putting up those towers. And because they're heavily labor intensive by not doing the contractor services, they derive a higher margin from that and they benefit. Point revenue. These perspectives, we're going to look at each of the four services separately. LTE deployment in North America, Japan, and South Korea, really leading the charge here. It's all about LTE. They're high margin markets and fast-growing markets on the telecom end. There's good there. And benefiting, they have contracts with each of the tier ones in the United States. Be a good beneficiary of the T-Mobile Metropcs deal. We'll talk about why in a little bit later, why that's going to be good for a net positive for the TIS industry. Huawei is benefiting from some of the modernizations in EMEA, and there's also some development going on in China as well. They're getting some of this from. Alcatel-Lucent, Nokia Siemens, not doing so well on the deployment end. Alcatel-Lucent, their mix in deployment is more heavily weighted towards EMEA, and right now, particularly North Africa and Middle East. Unfortunately, both of those sub-regions are experiencing some civil unrest and economic issues. We see it in the news, really impacting operators' purchasing decisions and how they are, their roadmaps, their deployment schedules. It's really pushing things out. So that's a really big impact on them. Group services. And the software guys getting some pretty good growth, Cisco, SAP, Oracle. Ericsson now, they're a little bit bigger in software now. They bought Telcordia. They actually just bought ConceptWave, which is a BSS company, a few weeks ago. So some good growth there. And services, you have a lot of consolidation going on the infrastructure end. When you're coming in to a legacy network and overhauling the 2G, 3G networks, and you're putting in one macro base station, there's less infrastructure out in the market, out in the environment, and there's less stuff that needs to be maintained. So, cut with the fact that operators are really exerting a lot of pressure on the vendors to reduce prices on maintenance, have a very challenging market, and that's really that theme has continued since the recession, where there was extreme pressure on these contracts to get the cost savings. Little professional services, system integration is key here. Organizations are driving that. All that you have on the software end, the billing systems, the operational support systems, you're bringing this LTE infrastructure. You need to integrate that with the legacy systems, and there'll be a transition there. And operators are reaching out to and help to do this. This is very complex work. This is high-value, high-margin work. Ericsson has been a big beneficiary so far. IT guys have also been beneficial. IBM, HP doesn't look like it on this chart, but their decline in revenue this quarter was more for a bad comparison. If you look over the last 2 years, they've had pretty good traction in the software SI. And we expect that to continue going forward. So we look at services in two different buckets. The first bucket is managed network outsourcing. So that's like when an operator outsources the entire network. A good example of that is Sprint outsourcing the entire network to Ericsson. On the other end of the spectrum, you have outtasking, with like selective outsourcing. So a company like Amdocs providing, managing the BSS systems for an operator, but not the infrastructure, the actual equipment that's in the field. It's more of a selective operator outsourcing a slice of that network. Alcatel were the big managed services in 2Q12, and we expect that to continue going forward. In Europe particularly, operators are batting the hatches. Things are very uncertain in Europe with the Sprint debt and all this other economic uncertainty going on. Operators are relooking at their operations, and they're saying, how can we lower costs? We need to do this. And they're willing now to take a little bit more risk and maybe consider outsourcing more of that work than they had been previously. The ones are going to benefit the most from this. Come in and say, hey, we can take your whole network over, and we can give you, 20% reduction in OpEx. I mean, that's an attractive business case that operators are really considering. The same in CALA as well. Not on the cost pressure side, but the propensity to outsource in that region is very high. On NSN had a very difficult quarter. Services, they're still doing pretty well. Business, the decline that you're seeing there is primarily attributed to the OI contract. Now, restructuring, Alcatel-Lucent and Nokia Siemens, both of those companies are re-looking at their managed services businesses and deciding which contracts should they renegotiate, should they consider renewing, they consider getting out of. Some of those managed services contracts are very low margin, maybe negative margin. So there's a big push now to get out of those low margin contracts, focusing on the higher value services, and that's, there's going to be a drag on the growth in those businesses, but we expect to see margins start to increase over the next, next quarters, next few years. Interesting to see how that is going to play out. OI contract being out, and Alcatel-Lucent is looking at 15 of their 38 contracts to consider restructuring or exiting as well. Jumping into the regional perspective here, North America, LTE. Aaron lead charge here, very good trend with the T1s who are spending the big bucks. Sprint this year alone is going to spend something on the order of $6 billion on CapEx to get network vision complete earlier than originally planned. Ericsson has been a big beneficiary of that. Also Alcatel-Lucent and Samsung, those are the other suppliers of network vision, but Ericsson got not only the largest part of that contract, they got most of the services within that contract. So they're a big, that's really propelling them higher to Q12 as we see. Outsourcing and Huawei. Very good growth in EMEA. They have some really good managed services contracts in the quarter. Two that I'm going to highlight is Sunrise Telecom. Now, contract that Huawei came and took from Alcatel-Lucent. Alcatel-Lucent originally was providing these managed services to Sunrise Telecom, and for whatever in that contract did not renew, and Huawei walked away with that contract. It exemplifies how Huawei's coming in and really getting, really rooting some of these incumbent relationships that have been fostered over the years. They can come in and say, hey, we'll give you a lower price, or we'll throw in, a bunch of extra stuff to sweeten the deal to close this business. They care about market share gains more than the profitability right now, where Alcatel-Lucent and Nokia Siemens, more focused on the profitability and willing to sacrifice a little bit of market share. So there's a trade-off here, and we're seeing that numbers where Huawei's taking some of this business and they're getting that market share. The Pacific, India still remains interesting case. There's a lot of red tape going on there. I'm sure you guys have heard the revocation of the 2G licenses that happened. Operators are frozen. They don't know what to do. They don't know what the environment is. They don't know what the rules of the game are for doing telecom business in the country. So that's impacted TS revenues there. But you have Japan and South Korea picking up that slack, and that led to some growth for some key vendors here. Ericsson, Nokia, Siemens, Huawei have been big beneficiaries of those LTE deployments in those two countries. And then looking out a little further, LTE is going to be a big growth driver. Fixed FDX deployment in China. The Chinese government, as part of a new economic stimulus plan, they want to cover several hundred million people with fixed broadband access. And that is going to be a big driver of TIS going forward for Alcatel-Lucent, particularly. They won a large chunk of that business. They will be benefiting from that in the first half of 2013. We'll start seeing that money come in. Lastly, Central America, here outsourcing of services. The OI contract is back on the market still. I would not be surprised to see a Huawei or ZTE step in and be willing to take over the business that NSN's exiting. It's low margin, but that's a good exposure for Huawei or ZTE to come in, get like that, and then pull through some of their equipment, really entrench themselves in those key growth markets. Now, seeing governments in the region have very receptive to getting these new networks deployed. Spectrum end, they've been bringing new spectrum to market quickly and have been attaching strings to that, saying, okay, we will give you this block of spectrum, and in turn, you have to commit to deploying LTE or HSPA Plus within this time frame. And those options are, push operators to push these networks out faster than they might have otherwise done because they want spectrum. Growth driver, and that is going to continue. The governments, Argentina, Chile, Mexico, Brazil, all those countries are, really pushing forward with these national deployments of these networks. So, coming back to the key themes, we've looked at managed services and how it's been a big growth driver in particularly EMEA and prioritizing cost reduction. Second, North America, big driver of deployment services, also SI, and managed services as well. With the Sprint, that contract continues, the Clearwire managed services contract. And third, the restructuring programs saw in the EMEA case where Huawei is getting very high growth, taking like the Sunrise Telecom managed services contract. That's how them get market share, get some new account penetration, and become a greater force in that market. So, my name's Chris Antlitz, Analyst, Networking and Mobility Practice. Open questions.
Great, thanks, Chris, and thank you. We've covered a couple questions so far. The first question that we had come in was, what are the most popular types of managed services operators are using? What are the regional differences?
Right, so managed services, think outsourcing and outtasking. And in each region, you'll see a different mix. So what do you mean by that? So if you look at North America, there's a propensity for outtasking rather than full network outsourcing, with Sprint and Clearwire being the exceptions. Most of the revenue in North America comes from outtasking. So AT&T, Verizon outsource their billing to an Amdocs or a Telcordia. Those are the primary managed services you'll see in North America. Whereas if you look at EMEA and if you look at India, there's a greater propensity to do more comprehensive managed services contracts. So managed network operations, taking over the entire network. Those are very popular as well. So it really depends on the region, what, it has to do with a variety of factors, why operators would outsource rather than keep those functions internalized.
Thanks. Second question we had come in, how will the proposed merger between T-Mobile and Metropcs affect the market in North America over the next few years?
So I actually think this is going to be a net positive for TIS. If you look at the networks of Metropcs and T-Mobile, Metropcs has a CDMA network, which is their legacy network. T-Mobile has the GSM, both going to LTE. So yes, there's going to be convergence at LTE, but there's also going to need to be services provided around those legacy networks for things like refarming spectrum or hauling the legacy base stations, putting in multi-mode base stations that are LTE enabled. So this is really giving T-Mobile an opportunity to catch up because they've been behind the larger in the United States. They've been very behind, and by with Metropcs, not getting the spectrum that they critically need to deploy pan-U.S. LTE network, they're also getting assets that they need to integrate back office systems, all these other components of the network that's going to throw large, complex projects that are going to be good margin, higher volume, and their existing suppliers are going to be the key beneficiaries of those types of contracts.
The next question that came in is, could you speak a little bit more on the methodology of breaking out TIS revenue for the additional enterprise vendors, i.e. Cisco?
So, I'll repeat that, please.
It was, could you speak a little bit on the methodology of breaking out the TIS revenue for traditional enterprise vendors, i.e. Cisco?
Okay. Yep, so each company, each of the 38 companies we cover in TIS, we do company-specific bottom-up research. So we do a variety of secondary and primary research, and we isolate the two, and we're able to isolate out what is the TIS section of the overall company. So in Cisco's case, they actually provide us guidance on how big their service provider business is, their services businesses. So we can take that information, triangulate that with deals they get with service providers, triangulate that with trends taking place in particular regions, and we can create this apples-to-apples view between other vendors of, you know, how big is this business, what kind of margins are they getting, what are the growth drivers, we each of the 38 companies that we track.
The last question that's come in so far is, why would vendors want to take on low-margin businesses being led by Alcatel-Lucent and Nokia Siemens? What's the rationale?
Right. So again, it's about strategy. So you have Alcatel, Nokia, Siemens reevaluating their portfolio, clearly want to move in a higher margin direction, so I think some of the lower margin contracts. Where on the spectrum have the guys that want the market share. So you have Huawei, ZTE, they want market share. If they don't get a good margin, they're okay with that. At least now. So the value for them, for the Huawei, ZTE type vendors is they get a penetration, they get a good foothold in key operator accounts, they can entrench themselves and pull through equipment. So if you have a vendor that's well rooted in a network, that might unlock opportunities to pull through equipment sales. So high margin business. So the managed services contract might be low margin. It's giving them an opportunity to expand their avenues to get higher margin business. For contracts with that operator.
We have no other questions that have come in, so with that, I'd like to wrap this up. For everyone on the call, I'd like to invite you for another webinar on Thursday where we'll be covering the networking and mobility vendor benchmark in a webinar series very similar to this. If you'd like to get information on that, please send us an email. We want to thank everyone for joining us today, and Chris, thanks for your time. We're going to keep the chat function open for another couple of minutes in case there's any additional questions that you guys want to lob into Chris. We look forward to having the same conversation with you guys next quarter. Have a great afternoon, everyone.